What is going on, everyone, and welcome back to Explain the Charts. Today is October 3rd, 2025, and we are looking at Litecoin, or LTCUSD, which has had an incredibly eventful week. The news cycle is churning with conflicting reports, creating a very interesting trading environment. On one hand, we have headlines like Litecoin surges 16% in 1 week ahead of imminent ETF approval, suggesting a major bullish catalyst is just around the corner. This sentiment is fueling what many are calling an October rally, which has seen Bitcoin break past $120,000 and lift the entire crypto market. However, pouring some cold water on that excitement, other sources report that the Canary Litecoin ETF faces delays amidst the ongoing U.S. government shutdown. Apparently, the shutdown is halting SEC reviews, and there are even reports that the SEC urged several altcoin ETF issuers, including for Litecoin, to withdraw their filings. This creates a classic push-and-pull scenario of high expectations versus regulatory hurdles. Whale accumulation has also been noted, with large holders reportedly buying up LTC during recent dips, suggesting they see it as undervalued. So, with all this conflicting information, let's dive into the charts to see what the price action is telling us. Starting here on the daily chart, we can see the broader story of Litecoin over the past year and a half. After a significant downtrend and a long period of consolidation in the $60 to $80 range for much of 2024, we saw a massive surge in volume and price starting in November 2024. This rally saw LTC explode from the mid-$60s all the way up to a peak of $147 in early December 2024. Following that peak, we saw extreme volatility, with a sharp drop back down to the $100 level, which has since acted as a key psychological support. The price then experienced another major leg down, bottoming out around $80 in early February 2025 before beginning a slow and choppy recovery. Notice the significant dip in early March, where we tested support in the low $80s again, followed by a steady climb back up. This brings us to the most recent price action, which shows a powerful breakout in the last few days. Let's zoom in on the period from the beginning of September 2025 to now. As you can see, for most of September, Litecoin was consolidating in a range between roughly $102 and $115. This sideways action indicated a period of accumulation and market indecision. Then, on October 1st, we see this massive green candle, where the price exploded from an open of $106.89 to a close of $115.16. This move broke cleanly through the previous resistance range, signaling a strong bullish reversal. The very next day, October 2nd, that momentum continued, pushing the price up to a high of $122.71 before closing at $119.65. This rally directly correlates with the renewed hype around a spot ETF and the broader market strength. The volume on these 2 days was significantly higher than the preceding weeks, which adds conviction to this upward move. We have now established the previous resistance zone around $112 to $115 as our new immediate support level. Now, let's look at the hourly chart to get a more granular view of this recent breakout. Here we can clearly see the powerful impulse move that began at the start of October 1st. The price action was almost vertical, showing intense buying pressure. After peaking above $122 on October 2nd, the price has entered a period of consolidation, trading in a tighter range. This sideways movement is healthy after such a strong rally, as it allows the market to digest the gains. It also reflects the uncertainty from the conflicting news reports we discussed earlier. Short-term support appears to be forming around the $118 to $119 level. If we lose this level, the next area of support to watch would be around $115, which was the breakout point. On the upside, the recent high near $122.70 is the clear resistance that bulls need to overcome to continue the trend. Switching to the 15-minute chart, we can analyze the price action from just the last day. We can observe the push to the highs near $122.71 and the subsequent pullback. The price has been making a series of lower highs and higher lows in the last several hours, forming a tight consolidative pattern. This indicates that both buyers and sellers are in a temporary equilibrium, likely waiting for the next piece of news or a move in the broader market to pick a direction. For intraday traders, this is a chop zone, and it's often wise to wait for a clear break of this pattern before entering a new position. A break above $120 on this time frame could signal a retest of the highs, while a break below $119 could indicate a deeper pullback is coming. The volume has tapered off during this consolidation, which is typical behavior. So, let's go back to the daily chart to recap and put it all together. The long-term trend has shifted bullish with this recent breakout. Our key support levels to watch are, in descending order, the immediate short-term support around $118, the crucial breakout level at $112 to $115, and the major psychological and structural support at $100. As long as we hold above the $112 level, the bullish structure remains firmly intact. To the upside, immediate resistance is the recent high around $122.70. If we can break and hold above that, the next major target would be the December 2024 highs in the $135 to $147 range, as some analysts have pointed out. This zone represents a significant hurdle, and we would expect to see profit-taking there. So, what are the potential scenarios from here? The bullish case is quite clear. Any positive news regarding the ETF, whether it's an official approval or even a strong, credible rumor, could act as rocket fuel. This would likely send the price decisively through the $123 resistance. Under these conditions, a swift move towards the $135 target seems highly probable. I would place the likelihood of this scenario at about 60% if a positive news catalyst appears within the next week. The bullish case is reinforced by the broader market strength and the on-chain data showing whale accumulation. Conversely, the bearish case hinges on negative news or a prolonged lack of any news. If the government shutdown drags on and the ETF decision is officially postponed indefinitely, we could see a significant pullback. A break below the $115 support would be the first warning sign for bulls. If that level fails, a retest of the $100 to $105 support zone is very likely. I'd put the probability of this retracement at around 40%, increasing each day we don't get a positive catalyst, as market patience may wear thin. Looking ahead, the things to watch are obvious, but critical. Any announcement from the SEC, news about the US government shutdown, and Bitcoin's price action. Also, keep an eye on trading volume. A breakout above $123 on high volume would be a strong confirmation of bullish continuation. Thank you for tuning in to Explain the Charts. If you found this analysis helpful, please hit the like button and subscribe for more content. And as always, please remember this is not financial advice. It's for informational and educational purposes only. Always do your own research and make investment decisions based on your own risk tolerance.